Hi, this is the Cordant Wealth Market Update for August 13th. Thanks for joining us and taking the time. Today we're going to look at a couple things. We're going to quickly check in on the market. We're going to check in on some health and economic data and then take a look at elections 2020, or at least the impact on the markets. I know that's a hot topic in the news a lot, and we're getting a lot of questions around that. So wanted to look at some different scenarios and the impact that they might have on the market. So first of all, just a quick check-in on the markets. We are, as of yesterday, on the S&P 500, very close to the all-time high that was set in mid-February. So we're within about 0.5% there. So again, a 34% drop, which is right in line with the bear market average, and then about a 51% recovery from there. Neither of those things in and of themselves are unusual. What it has been unusual here in 2020, a fair amount, but from a market perspective, the speed of the drop and the speed of the recovery is unusual, but the magnitude is less unusual. Health and economic data here, in terms of the health data, we're starting to see some of these numbers start to go back down, which is great. Cases declining, hospitalizations declining, and deaths kind of flatlined, unfortunately, but hopefully those start to decline as well as the cases and the hospitalizations decline. That tends to lag some of these other indicators. So positive trend in that it's declining, but obviously we're going to keep an eye on this, and the markets continue to pay attention to what's going on here with the pandemic. From an economic perspective, first thing to remember is the stock markets tend to look at what the economic data is for next year, or what they're projecting that to be. That's much more indicative of what the markets are doing this year than the economic data this year. So 2021 data matters more to the returns in 2020, for example. So on the data front, again, the theme has been the data has been coming in better than expectations. So the actuals are better than the consensus. And again, for last week, across a bunch of these different indicators, manufacturing services index, unemployment, and payroll numbers came in better than expectations. So with an unemployment rate, the number was lower, which is good. Initial claims lower, which is good. Payroll number, which is new jobs, higher than expectations. So again, economic data continues to come in better than expectations. You can see that here on the economic surprise index, which just aggregates all these different indicators, and a number above 0 means on average the data is coming in better than consensus. A number below is coming in worse. So again, we see pretty high numbers. The surprises are positive, which is a good thing from a market perspective. So that's one of the reasons the data is coming in better than expectations, that continues to describe why the markets have been resilient and why they have bounced back like they have. Now transitioning to end of the year, an election's coming up in 2020, and again, we're getting some questions around that. So wanted to look at a couple scenarios, but before that, wanted to pose a quiz. So here we're looking at, most of you probably recognize Steve Jobs on the right and Tim Cook on the left, the last two CEOs of Apple. So the question is, Steve Jobs, legendary CEO, who's created more value for Apple over their tenure as CEO? And think about that. Think about the percentage, maybe the percentage of value that each of these individuals has created for Apple in terms of the total value of the company. And at the end, I'll share the answer. So theme here is predictions are difficult. So we're looking at the odds of the presidential election coming up in November here in the US. These are betting markets, so people putting money behind these predictions. And what you can see is expectations are for Biden to win the election, 60% to 40%. So not a foregone conclusion by any stretch. Those of you that remember the 2016 elections, a lot of the polls were wrong there. So predictions are difficult, but this is where we are today. Really, there are three main scenarios that can play out in the elections, though. So one would be status quo. So Trump remains in the White House, Republicans remain in control of the Senate. The second scenario would be the so-called blue wave. So Biden is elected president and the Democrats take back control of the Senate. And then the third scenario would be a gridlock scenario where it's split basically. So Biden is elected president and the Republicans remain in control of the Senate. So what are the impact of these three scenarios on the market? That's what we want to look at. And breaking it into these three different scenarios and putting some odds on it. Now this is from Barron's, which did an election 2020 report where they talked to some different people, try to quantify the odds and try to quantify the impact on the markets. And I mean, the first thing that I would take away from any of these scenarios are none of these scenarios have a huge major impact on the market, at least from what's expected. The second thing is all of them have some pros and cons, at least from a market expectation. So the first scenario, status quo, about a 35% odds, 1 in 3 chance of this happening, according to them. They see a 2% upside for the equity markets. The pros here under this scenario, not from a policy perspective, but just from a purely equity market perspective. The pros would be this fear of higher taxes and regulation subside. The cons would be some trade policy uncertainty remaining. And so all else held equal, obviously a lot can change. The health impacts can change, economic data can change. There's a lot that can change, but everything else held equal, just based on the election, what they're saying is a 2% upside from where we are to equity markets. So that's the first scenario. The other thing I think to keep in mind here is nobody knows. Predictions are hard. It's going to be near impossible to forecast who wins the Senate, who wins the presidency, and what the impact on the market is. But helpful to understand, this is kind of what the market's pricing in aggregate across the board. Second scenario here is the blue wave scenario, where Biden takes the White House, Democrats take back control of the Senate. Putting this at 45% odds, so the highest odds of these three scenarios, but 45 versus 35 in the last scenario. Here they see about a 2 to 5% downside for markets, so not a huge downside, all else held equal, but downside. The main con here would be higher taxes, which would be expected, and higher regulation would be expected under this scenario, which would weigh on the equity markets, which is where you get that 2 to 5%. Some of the offset to that, though, is important to remember that campaign messaging isn't policy. So a lot of times politicians are going to say one thing to get elected, and in reality, maybe they can't execute on all of that once they take office. The other pro from a market perspective is higher spending in terms of stimulus and other things may offset some of those tax implications. The third scenario here would be gridlock, where you have a split between who's in the White House, the party that's in the White House, and the party that controls the Senate. This is actually a 30% odds, but the most attractive scenario in terms of the equity markets. Equity markets sometimes like the split control in government. So the pros here would be lower trade risk and increased predictability, primarily around policy and things like that. And then the cons would be expected higher regulation in this scenario. So I say all that just to give a sense of what the markets are looking like and kind of what's baked into where we are today. What to watch going forward? This is more, I would chalk this more up to interesting, if you want to pay attention. But historically, from the second convention, which is going to be the Republican convention this year, which is a different convention than in the past, but they're going to hold their convention on August 24th. So from that date to the day before the election, the Dow's gained 5.7% when the incumbent party has won the election. So if Republicans were to remain in control of the White House, history would say markets would be up 5.7% on average, and they're down, they're up, but up by less, 1.4% when the incumbent party has lost. So if you want to pay attention, those would be two things to pay attention to. How do the markets do, basically from August 24th through the day before the election? That historically has provided a little bit of insight into which party is going to win, but take it with a grain of salt. The last reminder here with politics, we've covered this before, but it's really difficult to identify systematic returns patterns in election years. On average, markets have been both positive in election year and the year following elections, and markets tend to provide positive returns on average under both parties. So really the advice is don't mix politics and investing. It tends to be detrimental to your investment results. So that's it. Obviously, we're going to keep paying attention to what's going on politically throughout the rest of the year, but that's where we are today. Getting back to the quiz of kind of a proof point of it's hard to predict what's going to happen. The answer to the question is Tim Cook has created more market value for Apple than the legendary Steve Jobs. You're looking at a chart of Apple's market capitalization from when Tim Cook became CEO. It's getting close to $2 trillion of market valuation today. When he became CEO of Apple, it was around a $400 billion market capitalization. So of all the value created by Apple for its shareholders over time, close to $2 trillion, under Tim Cook, 82% of that value has been realized. So you could say Tim Cook's been 82% more valuable, or 82% of the 100% of the value of Apple has been under Tim Cook. So 82 versus 18, the comparison to Steve Jobs. So I wouldn't have guessed that. I'm guessing not many people would guess that, but that's what the numbers say, and it's hard to predict what's going to happen. That's it. Thanks for listening. That's our market update. And as always, we'd love to have any feedback. If there's any topics you'd like us to address here, please let us know. Thank you, and have a good rest of your day.